How
Do you
much
think
effect do you think the ETFs and BlackRock and stuff have on the Bitcoin movement with the new ETFs that are coming out?
how much effect do I think they have
Yeah.
personally? That's a good question. I think the perception would be that billions of dollars make bigger moves. And in theory, that's correct, right? But because the amount of money being moved is so large, the regulations, the steps that they have to take in order to take, step A, B, and C and D to buy and or sell and to create that as a whole, so the whole way that whole system is traded, I think puts an extreme amount of limitations on the moves of those monies. So because of that, so based off of that thought process, I don't know that it's going to have as huge of a impact as people like to think. Because I know that us little guys who maybe, let's say we're moving 1,000 to $250,000 around at a time, which $250,000 is a lot, right? But not a lot of people are moving that much around. Think about it in the scale of tens of thousands and hundreds of thousands of people who are moving extreme amounts of crypto quickly, dynamically through so many exchanges. I think because of the movement of the money, I don't know that the ETFs are going to have as big of an impact being traded as people think. Because again, the steps they have to take to move the money, the scale that they're moving it is so small and the steps they have to take are so many. I think that might limit some of the impact personally.
The ETFs themselves don't necessarily have that much impact, but what it's doing is it's providing access to investors who wouldn't invest in Bitcoin otherwise. Because the ETF itself, what they have to do is have enough Bitcoin to support the number of people who have purchased into their fund. So if you start with $100 million or something like that, they have to get $100 million worth of Bitcoin at whatever the current price is. They have to by regulation. And then as it grows into the fund, then that is going to create demand. That is going to be pushing prices up because I don't know how often they need to rebalance, but they need to rebalance periodically, which is just saying that for this amount of deposits, if you will, into the ETF, then they have to purchase that amount of Bitcoin. And as it's sold, it's the same. So if people are selling out of the fund, then the fund has to sell its Bitcoin.
Right. I was just wondering about the persona more than anything. I know that they have to work in the
Well,
regulations.
what it's going to do is create a place where people who are, they're used to investing in ETFs,
Right.
but having to cross the Rubicon into the scary world of, Bitcoin wallets and whatever all else, this provides a very familiar way of putting money into an asset class. So
Right. And that's what I was wondering if it would draw from the actual, you know, people in the live Bitcoin uh,
I don't think
activities
so.
versus the ETF side.
I don't think so. I think what it's going to be is that people who are already trading in the standard Bitcoin marketplace and exchanges and whatever are going to continue to work where they work, but this is going to bring in new people and institutional money.
So I think to answer the question that you just said you had, I think there will definitely be an increase. So eventually be an increase. Now, to the extent of like the movement in the market and how much it's going to drive the market, I think there are other mitigating factors that still need to be considered because there's different regulations. The reporting, like when you buy and sell, you have to report within, you have to balance those sheets, X amount of days, months, blah, blah, blah. And because Bitcoin and crypto move so fast, there's a lot more regulations, even on the bigger firms that are going to be running these into ETFs that are far beyond anything I can intelligently discuss, but I am studying about right now. So we'll see on how much it moves. Again, big picture, airplane view. Yes, ETFs is good. Yes, I think it's going to bring more value. Yes, I think long-term, this is all bullish. But I think there's other mitigating factors for today that says, A, we might have a bit of a retracement. I don't know, was it Harold who said we usually get a dip before we get the explosion? I definitely think we might have a little bit more of a dip in us. Doesn't mean it's going to happen. Does not mean it's going to happen. Number one. And number two, the ETFs is powerful. In my opinion, I do think there's still other factors that remain to be seen and will only be seen after these have been running for a couple of years.
The other thing I would point out is that Bitcoin and cryptocurrencies in general used to be kind of a fringy investment that small players could make big moves. And as more and more institutional money comes in and the price of Bitcoin becomes higher and higher due to supply and demand issues, the small investor is no longer going to be impacting Bitcoin in the same way, which could lead to a little bit more price action sanity because the institutions are going to be investing based on standard principles.
So yes, I think as this continues to grow and as the ETFs are more stabilized and there are more of them, the price action is going to be a lot different. They're not going to be as huge percentages of a move. Totally agree. But I do have a question in terms of because are going to have limiting factors and they already do have existing limiting factors of how much they can trade and how they have to trade these and how they're allowed to invest in and take out of these. Do you think that the retail traders still might have a little more sway than what the market is thinking? Because think about the amount of companies, people, everything from your peanut vendor at a fair to God forbid, but illegal things, countries now using cryptocurrency as a whole currency that are still big players here. There are companies who only move money now in cryptocurrency. I still think there are other things that might give us, the people who are not in the ETFs, a little more sway than I think other people recognize.
Prices are discovered by willing buyers and sellers. So if you have institutional money that's just saying, I'm holding this for a long term, and it doesn't really matter to me what happens to the price within a certain amount of range, then some price discovery can happen on the fringes of the bulk of the holdings. But if price moves too far too fast, you can bet that institutions are going to step in, and that it's going to tend to flatten out price. The halving too, everything is supply and demand here. And the same thing happens with any kind of asset class. If there's a lot of demand and a limited supply, then prices are going to go up because people are going to be willing to pay more and more until they're not willing to pay that anymore.
One other thing I did want to add to, and everything you said was like really perfect, the way you broke down the ETFs and everything. So I hope, people caught that and understand that that's probably the best way to explain how that process works and how it can impact potentially Bitcoin in the future. The other thing too is that Bitcoin is a little bit of a different asset as far as the supply. Like this, everything is pretty much finite. There's a set number of Bitcoins that can't be changed. I guess we have an estimated amount or number of what we believe to be the Bitcoins that have been lost, or wallets that people who may have forgot their codes and can no longer access the Bitcoin since that can't be replicated if you do lose the keys or the information or your Bitcoin stolen, etc. So the other thing too is that with Bitcoin and everything, the way that everything works, it's like its own living organism, right? When I say that is that these miners and the nodes and everything that's set up, it's a physical blockchain and it's something that can be viewed. That's why they call it, hard money, and it can't be, for a lack of a better term, F with, right? So anytime someone is making a purchase, if people they're running their own nodes or whatever the case may be, people can see the wallets that are purchasing big money, whether it's an institute, whether it's an individual, whatever the case is on it. So that's sort of the thing that can cause the Bitcoin to actually go up or down based off of that. And when you see that there's wallets and there's people that are physically holding and not selling their Bitcoin, that's what can also cause the price to go up over time. And all it takes is another buyer just buying at whatever price and another buyer buying at a higher price and then a higher price. And then that's what eventually brings the actual asset to go up in pricing. I think too, as far as with retailers and whatnot, like the ETFs is another way for people who may not be inclined to actually go on a exchange and buy Bitcoin themselves and take self-custody and have to store it on their own, where they just go through the ETFs and say, hey, manage this for me. I'll put this amount of capital into it. And BlackRock and a lot of the US firms are the first ones that we're seeing that are getting involved and putting heavy money into it. But if you pay attention, there's a lot of places, Hong Kong recently just put their ETF in, and I think they got that actually passed like within a matter of days, which is crazy or insane to me. In Hong Kong, in case anybody doesn't know, there's a lot of big money. There's a lot of other countries that are still not involved that has big money that can potentially come into the game. But again, I digress back to Jenny's main point is that you sort of have to look at it long term. Again, with the access of YouTube and all these influencers, sometimes people get over exuberant and think that everything's going to go to the moon tomorrow. And that may not necessarily be the case. So you do have to have the long picture. And also, as Scott iterated with the actual halving, the prices will go up eventually, but it's over time. It's not going to be something that's just going to be parabolic because a certain date or number happened when, the actual amount of Bitcoin being mined was cut.
Well, you can think of the miners as being a flow of Bitcoin into the marketplace, which is sort of diluting the demand aspect of where the pricing is.
I think that kind of answers a lot of the question in terms of Bitcoin.
It's good. It's good. We are hoping. As I said, my aim is for the altcoin season. I just want to be there, be ready when it starts ripping upwards and to the moon and not coming back at all.
That's it. On the crypto note, N1C, actually their fees, their commissions, which is why I didn't play with crypto as much on Hugo's, for example, their commissions on cryptos are pretty good. I'm kind of impressed. So if you don't yet have an N1C account, please go over there, use the link in the link tree, take a look and play around. Not a bad way to be to scalp. The spreads aren't too bad on some of them. The contract sizes are pretty good. The risk is manageable and I like it. So to your point, if you want to be ready for altcoin season, you do so by making sure you have a very low average coin price as these coins pull back, and then you hold. As you get into a certain number of profit, and that's going to have to be a percentage that you choose and deem worthy, you're going to scale out of some or take some of your profits off the table, if that is your desire, and then let the rest run for the God candle and all the things they think are coming. But if not, you've also made your money and you've been a wise investor and a wise steward of your money. So that's very simple. And that would be the same with stocks. It would be the same with a lot of things. But that's it on crypto. So I like crypto. Crypto is the future. Long-term stuff, bullish, guys. And I'm going to maintain that.